Hello students. In our previous video, we were discussing about classification of banks. In that, we have discussed about commercial banks, industrial banks. We were discussing about central banks. We have discussed the definition, meaning and features of central bank. Features of central bank. Central bank is the apex body of banking system. The aim of central bank is national welfare and profit making is not the motive. Central bank is free from political influence and central bank have control over the financial system of the country. So in India, the central bank is Reserve Bank of India is the central bank. Now in this video, we are going to talk about functions of central bank. So functions of central bank, it is a 15 marks question which is asked in your question papers. Discuss the functions of central bank in detail. So one by one we are going to discuss the functions of central bank in detail. First function of central bank is issue of notes. So central bank has monopoly to issue currency notes. It is the first function of central bank. Actually, it is the prerogative or it is the authority of government to issue the notes, but this authority has been delegated to the central bank by government. While issuing the currency notes, the government has certain responsibility. Central bank has certain responsibility. Central bank has to maintain price stability in the country. It has to check, it has to control inflation level. It has to check domestic value of money as well as external value of money. So, government has to control inflation in the country. Inflation means increase in prices and fall in purchasing power of purchasing value of money. Government has to maintain domestic and external value of money. Domestic value of money means it is the purchasing power of money over domestic goods and services. External value of money means it is the purchasing power of money over the foreign goods and services. So while issuing the currency notes, government has to control the inflation, government has to maintain price stability, it has to maintain internal and external value of money. While issuing the currency notes, government has to follow certain principles. The first principle is uniformity. So the notes should be same, uniform. It should be uniformity has to be maintained by the government. So it should not be like that in this year what 2000 currency notes of rupees 2000 are issued, those will be different from previous one. No, it should not be like that. 2000 currency notes of rupees 2000 should be same, should be uniform. Security. Printing of notes has to be done under utmost security and elasticity. Elasticity means flexibility. It should not be strict rule that in a particular year, these many currency notes should be printed. It should not be like that. There should be no rigidity about that, but it should be flexible as per depending upon the inflation level, or maintaining external internal value of money, the currency notes, number of currency notes has to be changed. That is three principles: uniformity, security and elasticity. Second function of central bank is bankers to the government. The central bank acts as the banker. To whom? To government. It acts as the banker, financial agent and advisor to the government. For us, for layman, commercial banks are the banker, but for government, central bank acts as the banker to the government. So as a banker to the government, central bank keeps the accounts of government, and whenever central government or state government require capital, require money, that money has to be provided by the central bank. Central bank acts as a banker to the government. Central bank keeps banking accounts of government and lends money, gives money to both central and state government. This is how central bank acts as a banker to the government. Central bank acts as an agent to the government. Agent means doing something on behalf of another, that is called as agency. Central bank receives a payment and makes the payment on behalf of the government. This is how it acts as the agent to the government. Next function, a function of second function is as a financial advisor. So central bank provides advice to the government on economic and financial matters. Which are the economic and financial matters on which central bank gives advice to the government? That is the matters like foreign exchange policy, monetary policy, then commercial policy. Then whenever government requires the capital, government wants to raise the funds from the market, how the funds has to be raised, what amount of funds should be raised, everything, all that advice has to be given by the central bank. So central bank provides advice to the government on financial and economic matters. So it acts as a financial advisor to government. Now, third function of bank is the bankers to the government. That is bankers bank. That means what? Whenever we have excess money, we go and keep it in the bank. In the same way, central bank acts as the custodian of cash reserves of commercial banks. All the commercial banks of the country have to keep certain percentage of their deposit with the central bank. Means, say for example, one bank collects the capital, collects the money from the public, from the customers, that is 100 crores. From that 100 crores, it has to keep 25 crores with the central bank. So we keep our money with the banks. Banks have to keep amount of certain percentage of their deposits with the central bank. So this is how, and central bank gives interest to these banks on the deposit which has been kept by them to with the central bank. So this is how central bank acts as the bankers to the government. Fourth function of central bank is custodian of national reserves. So it is a custodian of national reserves. Which are the national reserves? It is the custodian of nations' gold and foreign exchange reserve. Reserve Bank of India acts as a custodian of countries' foreign exchange. Why? To restrict the demand of foreign exchange within the limits of available supply. So to maintain the demand and supply of foreign exchange, central bank take the custody of the foreign exchange. Then, so central bank acts as the custodian of gold reserve. That means what? It has to be a certain amount of gold has to be maintained by the central bank. So how much amount, what amount of money or what amount of currency notes are issued by the central government, same amount of gold they have to keep by way of a reserve. Why is it so? Why they have to keep same amount of gold of the same price which they are issuing, same currency notes which they are issuing the market? So it is a guarantee. So in order to give it is by way of a guarantee to pay back, or it is a promise to the depositors or to the note holder to secure the currency. So by way of a security to secure those currency notes, it is compulsory or it is mandatory for the central bank to keep certain amount of gold with the by way of a reserve. So it acts as the custodian of national reserves, that is nation's gold and foreign exchange reserves. Fifth function is it acts as lender of last resort. So central bank is a banker to all other banks. Whenever the commercial banks are in need of money, they approach the central banks, and their financial needs are fulfilled by the central bank. It acts as a lender of last resort. Last resort means it is ultimate source of finance for the commercial bank. So whenever we are in need of money, we approach the banks. In the same way, whenever the banks are in need of money, they approach the central bank. So central bank acts as the lender of last resort. It is a banker to all other banks. So it is the ultimate source of finance to the commercial banks. Fifth function is functions as national clearing house. Central bank acts as a national clearing house. Now, what is a clearing house? Clearing house is an institution where interbank claims, that means the claims between two banks are settled. Claims between two banks means, say for example, one bank B is a borrower bank and A is a bank which has given money to B bank. Now B borrower bank has to return that money to A bank. B bank does not have money to return. B bank is not returning that money. Both these banks A and B will have their accounts with the central bank. Through those accounts, this interbank claim can be settled down. Say for example, borrower bank B bank has taken 25 crores from A bank. Now B bank is not returning that money or unable to return it. Both the banks will have accounts with central bank. B bank, borrower bank, has 50 crores in their account. Through that account which they have in the central bank, 25 crores should be paid to A bank through the account which A bank will have in the central bank. That is the meaning. Central bank acts as a national clearing house. A clearing house is an institution where interbank claim, so that is the claims between two banks, from claims of one bank against another bank, has to be settled. The clearing balances, that means net balances or differences, are settled by transfer between their respective accounts at central bank. Now, the next function of central bank is controller of credit. Central bank controls the credit. So what credit has to be given, how much credit has to be given by these commercial banks, everything is to be controlled by the central bank. Central bank will have a control over it. Central bank is empowered to control the credit creation of the commercial banks. So central bank can control quality as well as quantity of the credit which has to be created in the market, which has to be created in the economy by the banks. There are certain methods to control this credit creation. So how they control this credit? So there are different measures to control it. The first method is bank rate policy. Now what is bank rate policy? So whenever we keep our money in the banks, we get the interest. So that interest is decided by the central bank. It is not that these commercial banks are free to give whatever amount of interest they want, they can give. It is not like that. It has to be decided by the central bank. Say for example, we keep fixed deposit in the bank. So usually previously we used to get the interest on it, that rate of interest was 12%. Now it has been reduced to 7%. Why there is a reduction? So to reduce the burden of interest on economy, this rate of interest has to be reduced. It has to be decided by Reserve Bank of India, and Ministry of Finance gives a permission for such things. So such measures has to be taken by the central bank to control the credit created by the commercial banks. So this is how it controls the quality and quantity of credit which is created by banks. Second measure is direct action. Direct action, so these are the steps which are taken by the central bank against other banks, commercial banks which do not fulfill the conditions or requirements. So central bank can take the steps. No doubt these banks have been given license by the central bank and they can act as a bank. But this license can be taken away by the Reserve Bank of those banks who do not fulfill the conditions or requirements. Direct action can be taken by the central bank. Next is credit rationing. Credit rationing means cash reserve ratio. So credit rationing means it controls the credit which has to be given by the commercial bank. Every action of commercial bank has to be as per the rules, regulations, directions which are given by the central bank. They can control the credit. What amount of credit has to be given by the commercial banks, that has to be decided by the central bank. So credit rationing. Then next is variation of cash reserve. Cash reserves means to control the cash reserve ratio, cash reserve in the country. changes. Cash reserve ratio means, say for example, there is every bank has to keep certain amount of deposit with the central bank. That is the rule. So sometimes it may say that if a bank collects 100 crores, it has to keep 40 crores with central bank, Reserve Bank of India or central bank. If there is inflation, they can make it 40 crores. But if there is a deflation in the economy, they can make it, reduce it to 20 crores. So as per the condition in the market, as per the inflation or deflation in the country, they can change, they can vary this cash reserve ratio. They can make it on that basis. Next function of central bank is publishes economic statistics and other information. So central bank publishes the statistics about the economic activities of the government and banking system. So all information about government activities, fund, finance, everything has to be published by the Central Bank of India, that is Reserve Bank of India. And last function of central bank is development functions. As we have seen that the main purpose of motive behind establishment of these banks is national welfare. So this bank contributes to economic growth of the country. How? So by construction of roads, bridges, dams, highways, etc. So whenever the government requires the capital for these developmental activities, which are the developmental activities? Construction of roads, bridges, dams, etc. So with such developmental activities, who provides the finance, who provides the capital? So capital comes from central bank. So it contributes to economic growth of the country. Thank you.